What is going on, everyone? My name is Nicholas Merton here at DataDash, and today is March 24th of 2019. Well, folks, I hope you all are having a fantastic day wherever you are. And today I want to spend some time to try to answer the question that's been on a lot of people's minds as of recent. And that is, where is Bitcoin at the moment in the market cycle? Are we still going through a full-fledged bear market? Are we setting up for a bull market here in price over the next few weeks? Or are we going through option 3? And that is a sideways period of consolidation. Well, I'm going to take the third option there, and I'm going to explain why I have that confidence. There's been a lot of debate between bulls and bears here over the past few months, and that has been the fact that if you're on the bull case, you say, well, we have higher lows on Bitcoin. We're maintaining support on the 50-day moving average over the last few weeks. And then the bears will probably say, well, we've continued to see resistance at around 4,200, and you're getting weighed down by the 100-day moving average multiple days here. So again, there's a lot of debacle here on the daily chart and on the hourly and all these small time frames. But as you all know, I'm a macro trader. I like to take a look at what I believe is more important, and that is the weekly and the monthly. And today we'll be emphasizing really on the weekly chart here. So let's go ahead and talk about, why I believe we're in a sideways period. There are good things to take into account here when we're pushing sideways. We've been able to maintain relatively good support here at 3,000, which was the first major point of resistance here on the euphoric period of the bull run in 2017. Again, very big even, very important level there, and we've been able to maintain support here on the 200-week very well. But bear in mind, the 200-week isn't going to be the driver for the long-term uptrend. You're going to need to see much more substantial price action here for Bitcoin to be considered in a bull market, right? So we're in neither really a bear market as of the last few weeks, and we're also not in a bull market. Again, we have to see a justification of price on either side. So today we're going to be talking about 3 indicators, and I'll show you guys how to get them on your trading view that actually play a role in this. Well, we've got one of them right here, and that is the 3 sets of moving averages I have here, the 50, 100, and 200 MAs, and they adjust to whatever time frame we're looking at. Now, I'm not just simply going to look at the 200-week as we've talked about before. I actually want to look at a combination of the green line and the orange line here, which indicate the 50-week moving average and the 100-week moving average, seeing as we're taking a look at the weekly time frame. Now, a lot of people are probably going to focus in on the fact that these are diverging here. They're more converging, proper English there. They're converging on one another at the same price range. And they've gotten very, very close if you take a look at the numeric values up here. But I'm not actually going to be talking so much about them converging. I think that is a sign that we've entered into the bottoming period. But so long as the green line is going to be going under the orange line here, this is a great index showing us that we're at a period where you can start to take a little bit of risk, that we are starting to enter into a bottoming phase, but that it's going to take a few weeks to really get to where we start seeing momentum, and possibly even a few months. So taking a look here at the last cycle back in 2015, we saw the green line, again the 50-week, going through the 100-week, and we had this period for a few months here, all the way from May over towards December of 2015. Now again, a multi-month period, finally getting to the point where we start to see some momentum. Now, there's 2 things that I want to point out here. And the first one's going to lead to my second point. The first thing is that a lot of people would say, oh, Nick, when these crossed, this was when we had relatively the same market bottom that we had over here for Bitcoin. Why would you not buy here? There's no problem. If you guys want to get exposure to it and add at these levels, that's completely fine. The thing is, what I would say, though, is that if you're an active trader and you understand that these markets are not moving that much and they're very hard and difficult to trade, if you're an active trader, I would wait till the momentum comes in for the market, because when you came to this period, you had the uptrend ready for you right then and there. So if you're looking to just do long-term investing, to buy on the dip and trade the cycles, I think the more you have a divergence between the 50-week and the 100-week, you can be confident that you're getting a fair price. But what range you're going to need for that, personally, it's up to you. But again, the major thing I'm looking for here is basically when the 50-week crosses the 100-week, which is flatlining in this case. I want to see a very similar case here. And what does that mean it's going to look like when it breaks out here? Could possibly be that the 100-week slowly grinds down here into the summer of 2019, and we can see it somewhere around the upper $4,000 to $5,000 range and have the 50-week crossing through there. So again, I think we're going to be still pushing sideways. I think this gives us a good index or indicator that we're going to be doing that. But we have other indicators we're going to take a look at. And again, I'll show you how to get those. So real quick, just for this one, you simply just have to look up 3MAS and you'll be able to find it. You'll be able to find, or if you look up 3 moving averages, things of that sort, you'll be able to find a lot of these averages, guys. But make sure you know that you're either using moving averages or exponential moving averages. These are similar to SMAs, simple moving averages that adjust to the time frame and actually keep with core price action. But there's also exponential, and some people argue which one you should use. I'm honestly fine with both, but at least I want to know what I'm using. So going on though, let's take a look at 2 more indicators. Now, a lot of you have probably heard me talk about the RSI on my channel before, but today we're going to be taking a look at the Stochastic Rsi. I mistyped there. There we go. So the Stochastic Rsi, and we're going to be taking a look at it on the weekly as we've been discussing. Now, I'm going to try to simplify the explanation of the Stochastic RSI. Many of you know that the RSI is a great measurement of getting an idea as to whether or not something is overbought or oversold. It tends to be that if you're over the 80-point range, it's overbought, and if it's under the 20-point range, it's oversold, right? It's just a general indicator. It's not a guarantee that something's not going to go lower or something's not going to go higher, but it gives us a good rough estimate without just having to take a look at core price action, being able to read it. Now, the Stochastic RSI, it is the inception. It is an indicator of an indicator. So what I mean by that is that we're basically taking measurements of the RSI here and applying it in a new, unique format to understand, even in markets that may not be overtly obvious that they're overbought or oversold, that they're set for a correction or an uptrend. It's a very good indicator to use to gauge sometimes when there could be a pullback. Even in very low volatile markets like we've been in here, there hasn't been that much volatile price range here for Bitcoin. But we can see in the Stochastic RSI that this shows we are overextended at the moment, right? So I wouldn't say that this is, for example, a bearish indicator, and I'll explain why. You know, we can see a lot of the times for the Stochastic RSI, if we take a look back, even at the previous market cycle back in 2015, where price action was moving generally upwards and downwards and kind of a zigzag formation sideways, again, consolidating sideways. And we had multiple Stochastic RSI highs and lows. But what this tells us is that we're moving through a very similar price range here, and that if the Stochastic RSI were to come down to these levels, right, we'd be back down in the same range. And that's important to understand with the Stochastic RSI. I'll go ahead and leave a link down below to the equation, but the Stochastic RSI is the RSI minus the lowest RSI in the given period divided by the highest RSI minus the lowest RSI. So what do I mean by that period I was talking about? Well, the Stochastic RSI uses a 14 period here. We're going to go ahead and a 14 RSI length here. This is the standard for the Stochastic RSI, and it's basically taking, in this case with the weekly, it's taking the last 14 weeks, which happens to be right here. This is the 14th week all the way to here. And what it's reading is that divergence between those 2 weeks there, right? There's been a huge divergence because this was down at 3,200. It may not seem like a lot, all the way up to 3,900. And that's what's led us from going to this range where we had a huge drop between the RSI and these weekly charts, or excuse me, the weekly candles. Whereas over here, we have a huge divergence. Now, what signals that this is going to correct over? When the blue line crosses through the orange. And again, we're hitting that point of resistance for Bitcoin. It's very likely that it will probably come back down and test towards this lower range. And again, very similar down here. Look at where the bottom was, right when we had the blue line crossing through the orange line, right? So again, very important to take into account. I think this means that we're going to be, again, having this swaying of the RSI or the Stochastic RSI through testing this bottom multiple times, or at least testing lower levels in the short term. Now, the third thing that we're going to be taking a look at is what's known as the True Strength Index or True Strength Indicator. If we go ahead here, if we take a look at our indicators, we can type in probably just TSI, I'm assuming. There we go. TradingView is very intuitive. They know the acronyms. But going on here to take a look at the True Strength Index, the reason why I want to use this as a valuable indicator to signal that we are, possibly in a bottoming period, and when we can tell when we're getting out of that bottoming period, is taking a look again at the previous market cycle with this indicator. Now we can see here that the orange line and the blue line are 2 different smooth moving averages that actually come into play. They're EMAs in this case, that are going to give us a good signal as to where things are heading. So we can see here, for example, as we were on the downtrend, we had some uptrends in price here, but the red line continued to block out the blue line here. We could not get the blue moving average here above there. Now the blue moving average here, I'm going to go ahead and show you guys. The long length moving average here, if I'm correct, is the blue line. And we also have the short length one. So we want to see this red line, the red or kind of pinkish purplish line here that you guys can see contrarian to the blue line, which is the 13 EMA. We want to see that come above the blue line. Now, we saw as early as March 2nd of 2015 in the bottom, this red line come above there. Excuse me, I apologize about that. We want to see the blue line come above there. So we see the longer term one coming up here. Now, the thing to take into to mind here, how I'm actually going to read this indicator for a period where markets could actually start to move higher, is I want to see this blue line resting on the red line here, right? I want to see it come down and rest onto here like we did in that late part of September in 2015. And look at that. It's right before we had the market uptrend. Now, if we take a look to where we are right now, we're slowly looking like it could be this week, much like as we were taking a look with the 50 and 100 week, that we could actually be, at the bottoming range here, that we could be entering into the bottoming of this market. And it could be that we just simply push sideways for a little while and trade within the range we've seen. Now, that would be good to see. But again, I'm going to wait for this to come up and come back down on the red line. I want to see that in the TSI here. Again, playing like it did in history. And we can see historically, again, usually when that blue line comes below the red line here, right? This can mean when it crosses back over here during these pullbacks in Bitcoin's price on the uptrend, that's where we can use it as an indicator to get a little bit optimistic. It shows that, again, the momentum's picking up here. The exponential moving averages, the blue line is continuing to cross through the red line, again, signaling confidence in the market. So these are three different indicators that you guys can use for your trading strategies, and you can use them in very unique ways. Again, once these indicators cross, I'd say, with the 50 week and 100 week, as well as these indicators down here, these exponential moving averages on the True Strength Index, I think this can give you confidence that we are entering into a bottoming period. But for example, with the Stochastic Rsi, and the fact that we are heading towards resistance here, expect that we're going to be pushing sideways for a while. Right? We don't have enough momentum here to break through that level. So what we're going to probably do is zigzag through, continue to probably hold on some of these key moving averages like the 200 week or key support levels like 3,000 to 3,200. That's what we're looking for here, guys. So I'd like to know down in the comments what you all think about these three indicators and how we're actually interpreting and using them. I'd like to know what you all think about it, whether it's positive or critical. Give me some ideas and feedback as well as to what you guys are using to gauge where the market is right now. There's hundreds of indicators out there that people create. And as I mentioned with the Stochastic Rsi, there are indicators of indicators. It can go on forever, but I'd like to know what you all think down below in the comments and get a discussion going. We can only get to being the best traders that we possibly can be by sharing information and helping one another out. But anyways, that's it for the video, everyone. Thank you all so much for watching, and I hope you all have a fantastic rest of the day. Trade smart, stay safe, and I'll see you all in the next video. Stay tuned.